My name is Cornide. I'd like to welcome everybody that's on the call today to the first monthly pre-investor IFC webinar. We are very excited about this launch and getting these programs out of the way. Just to let everybody know, we will be doing a monthly pre-investor webinar on the third Wednesday of every month. And then subsequently after that, every Thursday of every month, there will be an investor webinar. So once you've actually made an investment into one of our programs or one of our funds, you will then be notified about the Thursday meeting. So today, it's basically open to everybody that registers, which is not an issue. And then the Thursday one will be that. The format of these webinars is going to be pretty much the same. We're going to have an introductory section, talk a little bit about the strategies, about what we're investing in and how we're investing in and how we choose those investments. One of the great things about today, for example, is that we are actually going to do an active investment that we are raising money for right now. And so we'll go over the particulars, we'll go over the documentation, how we chose the investment. So it's actually a case study. We'll have some Q&A sessions at the end. And then we'll have some closing remarks by me or by anybody else who wants to submit any kind of comment or questions that they might have at the end. And we'll also let you know that this is all going to be recorded, also uploaded to our CRM system for you to basically go ahead and watch it if you were unable to attend. So I'm going to get started. Again, my name is Louis Cornide. I'm very, very excited about the launch of this new private equity investment fund specializing in real estate. When you partner with IFC Funds and our group, one of the things that we decided to do from the beginning was to do total transparency and also to provide a little bit of access to already many of the investments that we are investing in. So there's two primary goals when you invest with us. The number one is to take the hassle out of the real estate investing. And we do that by very, very strong asset management. And the second is to preserve investors' capital while hitting the targeted projected returns. That's very, very important to us. And so for the first time, we are in essence opening our existing funds, our existing investments with other clients, other partners that we've partnered up in the past. And we're putting that forward in this platform, which is called IFC Funds, which we're going to go over in a little bit in a second, the whole website, and where you can find a little bit more about the information, and also signed up for either webinars that are going to be a pre-investor like the one that you're on now, or if you'd like to have a one-on-one call for many of the partners inside the firm that will talk about specific questions that you might have about an investment that you're looking to do. That said, the fund is looking to primarily invest in three avenues. The first is hard money loans. The second is large new construction development projects, which with very limited access to the small, I mean $250,000 minimum investor. And then the third is existing multifamily building projects that we have an expertise in, and we have developed a nice portfolio that we manage with partners. Some of them we own ourselves, some other ones we manage with partners. I wanted to go in a little bit right now to share my screen and go in a little bit about the actual launch of our IFC Fund website. So you're looking at it here. One of the primary goals of this website is obviously to talk a little bit more about who, what, why, when, which we're going to get into that. But I wanted to go over generally that this is the space where we're drawing people to basically register to this monthly webinar that we have right here, which will be going over, like I said, introduction strategies of what we're investing in, and then also actual case studies, and then the Q&A and the remarks. It's a very simple website, and we basically talk a little bit about who we are, when we invest, what are we looking to do, which is the tailored private equity structures. These investments are not liquid. These are private equity investments in nature, which take a little bit longer to see through fruitions. The client needs to know exactly what he's investing in. So I kind of look at this as, like I said before, which is investing in real estate, but without all the hassles. Managing real estate, as many of you know, many of you have duplexes or smaller buildings. It can take a little bit of a time, especially if you're repositioning that asset. Once they start getting to 20 to 10 to 15 to 20 to 50 units, you really need a little bit more of an active player if you're going to get those returns on assets in there. And we talk here about what we do. Again, website is very easy to log on and to say, okay, well, I'm looking to become an investor. You would already book a call through here, and then or you want to join the pre-investor webinar, you're going to have it here. One of the good things about this pre-investor webinar also, which I haven't mentioned, is that we are looking to add some surprise expert to this webinar. Why? Because we do have access to certain partners, lawyers, property managers, other asset managers that we partner up with to manage other realtors or real estate professionals, and they will have expertise. One of the neat things about real estate is that there's a lot of specific sections or industries within real estate. So again, I talk about this because, you know, all this information is on the website, and I'm super excited about what's coming now, which we're going to talk about an existing investment a little bit. But I wanted you guys to know that IFC is going to concentrate on two funds. One fund, which is right here, which I'm highlighting right now, is the IFC Passive Income Debt Fund. The IFC Passive Income Debt Fund is going to be a hard money lending fund, which we're looking to target anywhere between 7% to 13% internal IRR. And it really is between 2 to 5 year term of an investment. We are looking for a $50,000 minimum there, so the amount is not that high right now. And we are looking to do quarterly payments as you become members of this fund. This fund is a very interesting fund. I would call this the Be the Bank Fund. And the reason for that is that right now there's a very interesting phenomenon happening in the real estate market that banks simply are not lending, and they're not coming through to really solve all kinds of lending needs to these developers, these real estate investors. Some of them are landlord owners that might need to refinance or cash out for all kinds of reasons. So there continues to be these massive hurdles from the point of banks, and banks are right now extremely tight with lending. This fund can take advantage of that. Why? Because on a timely manner, we might have a loan where it's 50% loan to value. It might be to bridge a rehab situation, or it might be to get it to closing, and then maybe it can be refinanced with a permanent loan after. That's what this fund would focus on. You know, I invite anybody who's interested in the specifics of this to let us know. We're working right now on all the private placement memorandum, all the operating agreements, and everything together with our investment portal partner, InvestNext, to get everything online so you're completely informed and can get the investment done. The second fund that we are already invested in is going to be this IFC Capital Appreciation Development Fund. This fund will invest specifically in luxury, new construction, very large projects. We're talking about projects in the neighborhood of 200 to 300 to even $400 million projects, where it's very difficult for a small investor, even if an accredited investor, to invest $250,000 or $500,000. The minimum amounts in these investments we have found, because we invest in this first, it's one of the differences between us and other funds, is that the minimum could be 5 million, could be 10 million, could be 15 million. So basically what we are doing in this fund is we are taking our investment, because we have invested in these projects before, and we're allowing our fund partners, our fund investors, to participate in the investment. Now, these investments carry a little bit different structure from the point of view of payout. Because they're new construction, there is a significant downtime from the point of view of investing in the property, or actually investing in the project, and when the investor starts to receive interest payments and principal payments, and then subsequently returns on investments, which are total. And if we do have a prospect investor who's interested in investing in that, and they do reach out to us, we will go over exactly what our projected cash flow situation is. And again, it's very, very important to note that that investment has been already made by us, which means that as an investor of IFC Funds, you're getting access to something that's already been closed, negotiated. Many of these construction projects, they're about to start construction. So there is specifics of how the money is invested, when does the interest for the pre-construction period happen, and when does it get paid. And we want to make sure that our investors have a total understanding of how that happens. It's extremely important. Completely different than the income debt fund that we have here. Why? Because the income debt fund, we're talking about quarterly payments right from the beginning. In the capital depreciation development fund, there very well could not, and I repeat this, could not be a payout for 18 months, 20 months. But the returns can be significantly higher in that fund. Okay. I'm noticing that there are some questions here, but I'm going to get to them at the end of the webinar. All right. So I wanted to share with you this part of the webinar, which is an actual case study of a project that we are investing in. We have been invested in. We have accepted investors for this already. We're partners in this as well as the manager. And this would be the type of documentation that you would be receiving when you're investing in a project with us. So you do have a private placement memorandum. This confidential private placement memorandum talks about what we plan to do on the project. I'm not going to go over specifically, but I can definitely email this to you. This is already starting to be loaded in our investor portal. And as long as you log into our investor portal, you will be able to receive this, not only the private placement memorandum, but the operating agreement, the subscription agreement, and everything that lays out all the fees and projected returns on this fund. This is a conversion of new development of 4 units in Allapattah. We are very gung-ho about Allapattah. The reason being is because Allapattah, we believe, is going to continue to grow for many, many years. And we are very heavily invested there. And we purchased this property. It was a duplex, and we're going to get to that now. The table of contents, everything that's included in this private memorandum, which is the investment overview, the property location, the property description, the investment strategy. What is it that we're looking to do there? The floor plan. So we engage our architect partners, the pro formas, and then work sources and uses of cash. Sometimes this could be a little bit overwhelming information, but we believe that it's important to have total transparency in these projects. This project in particular is going to have a total of 35 units, and I'll show it to you right there. Minimum price per unit is $50,000, and we're looking for a capital raise of $750,000. The rest of the money, there's a total cost in the project is going to be about $1,740,000. The rest of it will be done with financing from lenders that we've already secured. We'll go over the structure a little bit, but this talks about the disclosures. This is a map of actually where it is. This is actually Northwest 22nd and 17th. So this is 19th Street and this is 19th Terrace right here. This is a picture of what it looks like now after the demo. We purchased this about a year ago, purchased the land, started to do the plans, the demo, and the address is 1753 Northwest 19th Street. New construction, 4 units. The lot size is 6,800 square feet. And existing square, if you can see there that there was a duplex there, it was in very bad shape, and we were advised by the city of Miami to tear it down because there was unsafe structure violations in the building on the property. One of the great things about it is that we were able also to get a very good aggressive deal, and you're going to see that for that land when we closed on it. So you can see there that that's Northwest 19th Street. This lot, interestingly enough, goes from one street to the other. That's a nice feature. This is what it looked like right before they finished demoing it. A little picture there of the surrounding area. Again, Allapattah is a very up and coming area. There is new development, multifamily going up there, and because of its location, which is very central, very closely located to downtown, you can see the downtown there from the heart of Allapattah. It's also very close to the Jackson Memorial Hospital and the courts. All that area, we have been seeing a massive revitalization. It talks about that here in the investment strategy. This is the summary. We did invest $360,000 in the purchase of this property. We have several $100,000 in soft costs between the plans and the demolition already invested in it as well. and we're estimating that the total price of this project is going to be $1,740,000. The estimated value at sale, it will be between 2.2 and 2.5, and this is what we're estimated from the net cash flow in year one after we stabilize it, which means we would have all four of them rented. Little plans there about what was there before, what we're looking to do. These plans have already been through the city of Miami for several months, and because of a delay and a dedication that now the county is asking for, it looks to be like we will be getting the final approval for construction permitting in probably the next 90 days is what we're projecting. They're all going to be 2-bedroom, 2 baths, a family living room, dining room, little side lawn with a storage for each unit. They're all going to have laundry rooms, very convenient. I'm not going to go over these numbers, but this is the projections of what the construction costs are, what our net operating income is once it's rented, and what we're looking at as far as IRR on a 13-month basis if we would invest. We're looking at somewhere in the neighborhood. If this project would sell at a 5% cap, which means it would sell that, these are the IRRs. If it would sell at 6, year 20, and so on. But we have, for example, I think we're left with, I think, only 50 or 2 units there to invest in. But again, if you're interested in this, give us a call. This is information overload as far as I'm concerned, because we've done a very good job with our accountants, and then our projection construction guys to come up with what really are the numbers to construct here and what it's going to cost, all these soft costs, which are development fees, a contingency fee, we have marketing fees, we have all kinds of stuff legal that does happen. It can get very expensive. Impact fees, we've already paid the impact fees on this building. They were close to $20,000. I will share one more thing here, which I wanted to talk a little bit about. One of the questions that happens a lot, and again, this is returns and everything's disclosed there. All our structures are going to be very similar to this setup right here, where you have the investors, you're going to have an administrator or a manager, and you're going to have the actual fund, which is right here in the middle. And there is an operating agreement between the investors and the manager, and there is a PPM, which you're looking at it right now, which governs everything. And then this talks a little bit about the money flow. So we have the property here, and the fund is the one actually making the investments into the property by way of purchasing the land, which is cash, and by making any of the either obtaining loaning or depositing more cash for the construction. And then there's this operating agreement, which again, it's completed. We can definitely share those with you back and forth. And the manager, which is in charge of accounting, managing the construction, overseeing the developer, overseeing the general contractor, overseeing all the parts that get this project all the way through to completion. The same thing happens when we buy a multifamily, right? It's the same thing. The fund will buy the multifamily, and you're going to be an investor down here in the property. That property can be existing, and maybe the play there is that we're going to add value by adding a little bit of the rents, or maybe going Section 8, a government housing type of facility, and that will in turn get the ROI much higher. So you do have a manager in all these. You do have the investors, which are you. There's the fund. And so there's all this, the fees, administrative fees, which get paid to the manager, the investment duties, which are outlined, and then the equity investment that is being made, which is all based on the percentage of money placed in the fund. The reason why I wanted to talk about this is because this is really what we have done. It has worked well for us in the past from the point of doing the best thing. In other words, this structure that we have here that I just showed you is a structure that we use internally as well. The only difference is that now we typically have been the only investors in many of these projects. We are now allowing third parties like yourselves to participate in these type of transactions. We're very excited about this little project because this is a model that has worked for us before. And once this thing gets done, we believe that these units will be tremendous, can be tremendously duplicated inside that area of Allapattah, which is really in desperate need of some major rehab. Okay, I'm going to go on to some questions and answers now, and I have some that they had already submitted. Again, if some of this stuff has not been covered, you're more than welcome to reach out, book a one-on-one call with me or with some of the other partners that we have, and they'll be more than happy to go over the operating agreement, questions that you have about specific investments that are important to you and that might not be covered today. One of the first questions that we had was, what's the IRR? What's the targeted internal rate of return, IRR? I'll share that once again. So in a project like this, that it's about 35% in this case of the 4 units. And if the project is rented, is about 75% because there's going to be a 90-10 split. So this is important to have these conversations with you, the investor. We can also go to the fund. And so the debt fund, you're probably looking anywhere between 7 to 13% IRR. There is a split there between the investor, the accredited investor, and the management. Typically about 80-20 split. But I would urge you to read whatever the private placement memorandum that we have, that we will be sending to you, because there might be a little bit of a difference. And the manager also is entitled to fees. In the Capital Appreciation Development Fund, it's also an 80-20 split, but the returns typically are a lot higher, because once the project is complete, which could be 18 months, 2 years, maybe 26 months, in a very short amount of time, 30 to 60 to 90 days, not only will you get paid your preferred return back, but you're also going to get paid your principal back. And then you're just participating every time they sell a unit, you're participating in the return there. And it's important, again, to have the conversation with us. We have invested in these projects in the past. The returns are quite nice. We have one project that, like I said, we've already invested. We're looking to raise $4 million, I believe, in that one. But again, book a call with us directly, and we'll be more than happy to go over that. And I urge you to visit the website, look at some of the companies that we work with, how we do it. It's pretty much outlined there. The other question that I had is, what is the track record of the fund? Well, this is a new fund, so technically there is no track record. However, I can go to our Decor Realty website. These would be 10 units that we have in Allapattah, very close to that development. When we bought this, the rents were about $1,000 a month. We actually rehabbed the building there. It's actually quite nice. This is actually a 22-bedroom unit. The rents there with Section 8 are at about $2,225. Our average rent there is about $2,000. That building did need some CapEx expenses last year, but you're seeing the increase in return. Our increase in value there has probably doubled since we bought it. We did buy it some time ago. So this is another building that we bought more recently. We bought it about 2 years ago. This building, again, the rents were at $825. We have probably 80% of that building Section 8 at $1,800 a month for a 1-bedroom, Section 8 rent money. This is another one in that area in Allapattah, same thing. This is another 10-unit building. One thing that's interesting, some of these buildings are grandfathered in. In other words, if you were to try to build this, the city would never allow you to build like a ground floor project with 10 units like this. And really they're in desperate need, because these units are mostly filled with working class people, some retired, some folks that are just super hardworking and looking to do. This is another building that we have also. We own and we manage in Little Havana. This is actually 22 units. This also was very underutilized rents. Some of these folks were actually Section 8 tenants paying $600 and $700 when we took over this project. When all you really needed to do was manage the asset a little bit more focused, and then to get to the asset to where we're getting paid $1,500 for an efficiency there on Section 8, and for the 1 bedrooms $1,800, and we have a couple of 2 bedrooms units there that are 2,000, in the 2,000s plus for Section 8. So the need is there. We believe that these are other investments that we have that we manage. I'm showing this because the answer is we don't have necessarily a history with this fund, but we have been investing in real estate for a number of years now. And we feel that we're set up to scale because we have the technology in place to get us to be able to manage all these assets. And the other question is, how is the management team compensated and what incentives, are there aligned with the investors? I will refer there to the operating agreements. We disclose fees paid to the manager, which many times it's us or any of our related affiliated companies, ahead of time. Typically, we're going to collect a property management or an asset management fee. We are going to get paid for certain things that we do, like placing higher rent tenants. We have a team in place here in our offices that has great relationships with Section 8. They're able to reach out, place some of these tenants that have been looking for units for a while in some of our available units. We're able to get that, but we set up all our compensation on a split basis. And also there's an incentive there for both of us. So the more money the fund makes, the more money the property makes, the more money the investor makes, but also the more money we make, because the percentage doesn't change, but the amount does. So we are incentivized there to make as much money as the investor. And in many times, we are side-by-side investors. We start like that. But for example, now in the new development fund, like I said, we've already deployed that fund. I wanted to just have some closing remarks here. I wanted to thank everybody for attending the webinar. We're very excited about this launch. This is something that we have been working on for some time now. We believe that IFC Funds is going to have a tremendous amount of growth. We're very excited about this. We've engaged the right people, engaged the right lawyers, engaged many team members and many affiliated parties to try to get them. Some of the companies are here to try to get you a really good product. Here are many of the companies that we work with to put together these deals. We also feel that there has to be an upfront communication with you guys. That's why we urge you to click on here. Let us know if you want to be a part of the next month webinar, but we can also have a one-on-one and talk about other specific deals. We're open. We just want to make sure that when we do these webinars, we launch these investments and we're having the conversations with you, we really are looking to see that it's the right fit. Because we never want to be in a situation where maybe the investor did not understand, maybe the investor was not 100% cognizant of what was going on. So that's why we go over in abundance, asking questions, making sure that the time horizon is in check, understanding that these investments do take time and that in real estate, it is a game of surprises, right? So we've done construction on projects where all of a sudden we're over budget, but as long as we budgeted for those contingencies, we're going to be all right. We try to focus on what we know and the areas that we know. So that's important to us. I urge you to go to the website, book a call with us and get to that part. The other takeaway is that I invite you to the upcoming webinar, the other webinars, and I thank everybody for all their support. IFC Funds is the name of the website. Thank you so much for attending.